Friday, February 27th, 2026, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at how India has joined China and abandoned the London gold and silver price fixing mechanism for its own homegrown price discovery. And there's a lot more interesting news from India regarding gold and silver, and we're going to look at that today. And later on, after we look at the markets, I'm going to give you an update on Chancery Royalty, a private and brand new royalty, gold and silver royalty company that I was appointed to the board of back in January. And many of you will probably want to hear some of the news from Chancery because you got involved in the private placement at $2 of Chancery Royalty. So if you want to find out more, wait until the end and I will let you know. Before we go into India, and also I'm going to look at a chart of gold that I think is really interesting, a chart I haven't looked at before, so I haven't shown it to you before. Just wanted to talk a little about, I've been meaning to talk about this, and it's more to do with psychology and more to do with thinking for yourself, asking questions, because I found in the past that it's helped me when I see something that doesn't make sense to ask questions and not to just ignore it and say, well, that's the way things are, right? And I think it's a really dangerous stance to have, to ignore things like that. So what I'm going to talk about today is an incident that happened over 20 years ago. I was working in the city of London for ABN AMRO Bank as a futures and options broker, and I think it was around 2004. I guess the older you get, the harder it is to remember the dates because there's so many of them going past. But yeah, around 2004, and I worked in the city. If any of you know the city, I worked in Bishopsgate, Liverpool Street, near Liverpool Street Station. And for lunch, as a futures and options broker, we didn't go out for lunch for an hour or two. No, we went out and got something from Pret-a-Manger or anywhere else and brought it back to our desk and ate at our desk because we could be called anytime to trade for our clients. Yes, there were exceptions for me when I went to visit my clients in Italy or elsewhere. I might take them out for lunch or dinner, but I didn't have too many London clients. Anyway, I went to, I think it was Pret-a-Manger. I got my lunch and I tendered a 20-pound note. And at that time, I still got change, like I got a 10-pound note and a few coins. Nowadays, I think if you tender a 20-pound note at Pret-a-Manger for lunch, you might be tendered back a 5-pound note and maybe not even. But anyway, I was given back a 10-pound note and I was putting it back in my wallet. And at the time, the banknotes were bigger in the UK, and they were made of cotton, not the plastic material we have today. And yes, I've got a 20-pound note, not a 10-pound note. I haven't got a 10-pound note, but this will do. But when I was putting the note back in my wallet, I suddenly saw, what it said below here, below Bank of England. And you might want to Google Bank of England note and then search it because it's really hard to read it here. But it says, I promise to pay the bearer on demand the sum of £20. And I saw that. And I think I probably had seen it before, but I didn't care to read it. And I thought to myself, well, this is strange. I promised to pay the bearer on demand the sum of 20 pounds. And I thought to myself, 20 pounds of what? And the reason I asked that is because I had been already looking into gold, the monetary system. I had bought my first Krugerrands back in 2002. And and then when I got back to the office, it was quiet. And I searched for the Bank of England press office phone number, and I called them. And I said I wanted to talk to someone about this promise they have here on the note. And they passed me through to the press office. And I said, what do you pay? What do you promise to pay when I tendered this note? And they said, well, this was back when we were under the gold standard, but now we're not anymore. Back then you could take a pound note and they give you a sovereign for it. And that's how it was. This was just a promissory note. This wasn't money. And I said, so if we're not on a gold standard anymore and I can't come over and get 20 sovereigns for this, why have you kept the promise? And the gentleman said, well, it's because if your banknote gets damaged, you can get a new one. And then I said, well, why don't you write that? Why don't you say, if your banknote gets damaged, we'll give you a new one. Take this promise out. And he couldn't answer me, of course. And I said, thank you very much. I put the phone down, and then I realized this system is totally, fraudulent. You have to say it's fraudulent because they're promising one thing and they're not delivering on it, or they're hiding really the nature of it. It's like they're trying to keep the vestige of when the system was sound, right? By keeping this promise. And it was one of the things that made me more and more determined to keep stacking. And the moral of this story is that you always have to ask questions if something doesn't make sense. So back to India. And I think it's really important because you look at India and China, they've got 2.8 billion human beings in those two countries. So that's more than a quarter of the world's population. And, I don't have to tell you how China is growing and becoming a challenge to the United States economically. India is still far behind. There's still a lot of inequality and poverty in India, but it's a growing country. I think some people say that it's got the biggest middle class in the world. Just because of the sheer numbers of the population. It's interesting because in the bull market in gold and silver, the 70s and early 80s or up until 1980, China and India weren't really a big part of it because China was still backward economy under the thumb of authoritarian communism. It wasn't capitalist at all as it is now. And India was still very poor. It hadn't really developed as much as it has now. So this is pretty important, not just to my American viewers, but to my European viewers who sometimes ignore the importance of not only China, but India. And this is why these two stories that I'm going to go over are really important. So the first one is about the price mechanism, price setting, or what kind of valuation they used. And this came out yesterday, and I've got the story from investing.com. It says, India regulator shifts gold-silver valuation rules for mutual funds. India's Securities and Exchange Board directed mutual funds to use domestic stock exchange spot prices to value their physical gold and silver holdings from April 1st, 2026. What's interesting about that date as well, I guess maybe it's their tax year, but it probably is because it's a new tax year for companies in the UK as well. And seeing that India was a colony prior to 1948, they might have kept the same kind of system. But the other thing about April 1st is that this is when India is gonna allow silver to be used as collateral for loans for individuals and for companies. So this is quite interesting, isn't it? But let's continue. It says the regulator said on Thursday that mutual funds may now use pulled spot prices from recognized stock exchanges that settle physically delivered gold and silver derivatives contracts, ensuring that valuations reflect domestic market conditions. The change moves away from the currently used London Bullion Market Association prices to arrive at the valuation of gold and silver held by exchange traded funds. Well, that's a vote of confidence, no confidence, excuse me, on the LBMA and also COMEX for that matter. Yesterday I posted this post on X, as you can see here, how misaligned the price of silver is in the West to the price of silver, not just in China, but to one of the biggest bullion dealers in the United States. So you have to pay over $100 to buy an ounce of silver, a silver eagle. You have to pay over $100 in Shanghai to buy an ounce of silver. But on COMEX and LBMA, it was trading around 87 yesterday. So it makes sense for India to really abandon the LBMA and go for real price discovery. It will help also in the new regime where people can use their silver for collateral for loans, right? Because they'll be able to get more credit because the price will better reflect the value of silver. So that's the first news from India, and I think this is huge because China already doesn't really use LBMA nor COMEX anymore. Shanghai Gold and Silver Gold Exchange and the Shanghai Futures Exchange, that's where they set their prices. They're all derivatives, but physical markets, unlike in the West. And well, too bad for the LBMA and COMEX. They're going to go, well, they're probably not going to disappear, but they're going to be like a marginal place. And I would also speculate that a lot of silver miners especially, but also gold miners, they're going to start using more international prices to set the sale of their raw materials, i.e. gold and silver. Because why should a silver company that's working hard to mine silver sell it for a price that has no it doesn't reflect reality, right? If they can sell it in China and India for $10, $12 more. The other story, this is from mining.com. It says India expands rules for 385 billion stock funds to add gold. And there's another story that came out a few months ago that the National Indian Pension Fund scheme will allow 1% to go into gold as well. That's a different story. But now these stock funds are going to be allowed to add gold. So it says India's market regulator has allowed the country's 385 billion actively managed equity funds to park more of their money in gold and silver, giving them greater flexibility at a time when global demand for hard assets is rising. Under revised rules, the Securities and Exchange Board of India, stock funds can invest the remainder of their portfolios up to 35% of their assets in gold and silver instruments, as well as in units of infrastructure investment trusts. So, yeah, I'm going to stop right here. The world is changing, and hopefully you're waking up to it. You probably won't hear about this in the mainstream financial press, and I guess that's what I'm here for. So now, let's look at the chart of gold I was telling you. And by the way, this morning, as I speak here, it's just gone past 8 a.m. London time. Gold is trading around 51.80. It's down about $4. Low's been 66. The high's been 52.01. So fairly quiet. But silver has picked up. It's back above 90. It's at 90.04. It's up $1.80. The key level in silver right now, I think, is just above 91. A couple of days ago, that's when they shut the COMEX, right? When it was breaking out through 91. So I think it will probably test that level later on today. The rest of the markets are fairly quiet, really. Yesterday, I saw the NASDAQ was down most of the day. Today, it's pretty much unchanged. So I said I wanted to show you a chart, right? And it's a chart I haven't really looked at because it's a yearly bar chart, which means each bar is a whole year. So I was able to go back to I can go back further, but I went back to the mid-1920s. And I've drawn a line, a trend line at the top of the chart from 1934, and it came over the high in 1980. And why 1934? Well, because that's when they raised the price of gold from $20.67. That was January 30th or 31st, 1934. It was the Gold Reserve Act. And President Roosevelt signed it into law, and he revalued the price of gold to 35. So that's why you see the move there up on the chart from 2067 to 35, and then the high in 1980, which was almost 900. So that's a trend line there. And then I've drawn a parallel line with that line for the bottom, and it looks like a perfect channel, doesn't it? And what is interesting is that in 2024, we're right up against another line, the high from 1980 and the high from 2011. And it tried to break through it. That was 2024. That was towards the end of the year. And then you had the election in November, and the market corrected back from above 2,700 because that line goes through right around 2,700. So it failed, and it stayed under there. And then last year, finally it broke out, even though it started the year below it. And the reason why I think it was such a big year is because this line is really significant. And already this year, you can see that we're moving up. And I think there's kind of like a magnet up there pulling the price of gold, or a magnet down here pulling the dollar and all other fiat currencies, right? You can just turn it around. And unfortunately, I can't determine what the price will be towards, let's say, the top of the top trend line. But the last price here on the chart is $8,000 gold. You can still see it, but if you go forward 2-3 years, you can see what the potential is. And I think this is why I'm sitting tight and holding on to my gold and silver, and also considering some speculation. What kind of speculation? Well, the miners are speculation, right? And with that, I wanted to update you on Chancery royalty. Yeah, it's speculation. Everything in life is speculation, but it's a lot riskier speculation. So yeah, mining investment, any kind of investment, needs to be taken very seriously. A lot of research has to be done, and this is not financial advice, of course, from me. I'm just telling you what I'm doing and the way it works with Chancery. Yes, a lot of you participated in the first equity raising round for Chancery royalty, and at $2, and I benefited from it. I could have taken cash or shares in the company. I took the shares because I believe in Chancery and I want to be involved. So I just wanted to let you know about that. Yes, they appointed me as an outside board member back in January, and I am compensated for that. But I'm not really officially employed by them. I'm still independent. And the channel is still here. Anyway, first of all, I'd like to give you some update for those of you who participated in the first round and are now committed as well to Chancery royalty. It's a story that came out a couple of days ago about Chancery royalty securing $20 million royalty with Kefi Gold and Copper PLC for the Tule Kapi Gold Project. Well, that's the gold project that I went to see in Ethiopia. So I'm going to put a link to this story below in the description. You can find out more about this project. It's only one of the projects that Chancery is going to have over the next few years, but it's an important one. And yeah, I'll put it below in the description. You can read about it. And from my personal experience so far, I wouldn't be surprised if Chancery royalty, once it goes public, will be bigger than some other mid-tier royalty companies like Elemental and Versamet in the next 12 months. So yeah, have a look and see if it's something that interests you. Again, this is not financial advice. This is just an opportunity. Make sure you do your due diligence. Yeah, I'm going to put a link below in the description for this new round. And I have to say, it's been a really interesting first 2 months on the board of Chancery. And I think the trip to Ethiopia is the first of many to a lot of exotic places around the world. And you can bet I will be making videos from those places too. So with that, I'm going to wish you all a very good day and a great weekend. Take care. Bye.